FutureTrend channel is glad to welcome all of our subscribers for the date of 6th of December 2018. We are glad to present our analysis of major currencies. And what's important, what's really interesting, what kind of development we really noting at the moment is the so-called inversion in the yields of United States government papers between shorter dated and longer dated United States treasuries now started to have an effect, let's say risk aversion kind of effect, because the market despite of the fact that of course falling yields of United States government papers should not bode well for the United States currency, but at the same time we recognize an interesting development that market investors started to move their funds from a corporate sector, let's say from corporate papers, so-called shares, stock market, into more safety government bonds. And this kind of development has a negative impact on the world stock indices. As a result, the risk aversion sentiment had a kind of negative impact, especially on such kind of currencies like, for example, commodity block of currencies. And despite of the fact of a negative kind of effect on the United States dollar, as we already told, from falling yields of United States government papers, at the same time a risk aversion sentiment in this kind of environment also have a kind of negative impact on the so-called risk-friendly currencies like, for example, Aussie dollar or the New Zealand dollar. As regarding the New Zealand dollar, let's see the picture, technical picture. We still trading above immediate kind of bullish trend located at 68.50, and if so, the pair continues to look more or less bullish, and we should use such kind of downtick to establish a new long position in the currency, and we already did this. Let's see our block of commodity currencies trading, and here, as you could see, we are entered a kind of a small long in the Kiwi dollar. As regarding the Aussie dollar, where we were profit stopped at 72.50, anyway, we will use a possible downtick to below 72, where is another support in the currency. We will use such kind of opportunity to enter fresh long position with the stop below another support line located at 71.60, 71.50. Dollar yen and dollar Swiss in such kind of environment like risk aversion, spreading of risk aversion sentiment. The moment we see that such kind of currencies continue to fall. We are speaking about dollar yen and dollar Swiss. Dollar yen tested its support around 112.60 during early morning today. As regarding the dollar Swiss, also here the situation is very similar. The pair is under a little kind of downside pressure at the moment, while trading below its technical resistance barrier located around the parity level. All in all, in case of further spreading of negative news, in case of further falling of, for example, stock prices and the spreading of risk aversion sentiment, we should understand that dollar yen could move some lower with a next support located at 112.30, 112.90, let's say so. 112.90, it's here. And finally the lows of October located at around 111.38. All in all, this is our objective. We still continue to expect dollar yen lower At the moment it's a little bit premature to say, rather that's because of a rising risk aversion or some other factors. Anyway, as we already told a lot of times during previous reports, December could be really very volatile because of a lot of interesting news. For example, British Parliament approval or disapproval of voting regarding Brexit deal that's scheduled for December 11 because of Federal Open Market Committee that's scheduled for December 17-18. Also, we should not forget about the Christmas rally, about the Christmas liquidity, and the end of year different kind of demands or offers and different currency pairs. We should understand that December could be really very unpredictable. That's why we advise you to take care and be safer with stop losses. Follow our recommendations. It was your Future Trend channel, and we wish you a pleasant and profitable trading day ahead. Bye bye for now and take care.